It is October 29th, 2010, 4:14 p.m. Eastern Daylight Time. And this is your S&P 500 chart analysis update brought to you by freechartvideos.com, where we use time-honored techniques to understand modern markets. This video is for educational purposes only, and it is not intended to be any form of investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own due diligence and make investment decisions that are suitable for your financial situation. And I'm not a licensed professional. I'm just a guy that draws lines on charts. So let's draw some lines. Well, actually, I lied. I've already drawn some lines. This is today's action. We're going to take a look at what happened today. Then we're going to back out and see what happened over the past week. Then we're going to take about a 2-month look and then about a half-year look. Because it all adds up, I believe, to say the same thing. But you have to take the evidence in its entirety. To begin with, it appears that that over the past, let's see, I'm going to make this a 5-minute chart so it doesn't get quite so hard to see there with all the little details. And let's zoom in some. There we go. What I think we have developing here for the past 2 days is a symmetrical triangle. We only had 2 touches on the bottom, unless you want to count this. And we had 1, 2, 3 touches on the top. A breakout that I issued an alert on this afternoon. Then a pullback. A little bit deeper than I would have liked, but you know, all of this is a little fuzzy in here, so who's to say exactly where that line goes when you get right down to brass tacks? Sometimes these little shadows on candles don't really represent enough trading to have as much impact as a solid body. But that aside, we had a pullback. And then it appears that we took off again, and then we ran into resistance on this orange line. You might say, well, what's that orange line? That orange line is the peak from Monday at about 11.95 and change, drawn across the peak on Wednesday at 11.89.50, and you can see that it turned the prices back again here today. Now, if nothing else, you can look at this and say, wow, maybe there's something to technical analysis. To begin with, that line has been there for a while, and it bounced off of that line. It was turned back by that line clearly. So what does the week in its entirety look like? Well, I tell you what, we opened at about 11.80, what's that, 11.85. And we closed just a little under 11.84. So you might say, well, nothing happened in this week. But I would beg to differ. To begin with, we had a downtrend that took us down to for a test of this bottom channel that we'll take a look at. And by the way, when I'm really zoomed in, these lines move around a few pennies or even a dollar or two. So they'll be more accurate as we back out. But anyway, so we had a 3-day downtrend, bounced off the bottom, came up, back tested the break of that downtrend, plus a little bit, then went sideways. It looked like this was an inverse head and shoulders here, but it really didn't quite get the steam. I think that the line that defines this peak and that peak are still significant because it happens to be where we bounced today. But I think we got this this triangle that broke out, and I am watching this orange line to see if it gets taken out as well. So let's back up and let me show you one more thing real quick. When we look at a really tight view here, you can see we had another descending wedge pattern. I mean, we've talked about these. This briefly got underneath it, but for sure I had this line drawn across the tops, and you can see breakout, back test, then we kicked back up to check that orange line, and we ended the day giving up a good bit of that move, ending just barely positive. Let's look at a 2-month chart. And here we see the channel. It's been working for 2 months. This is a neckline of an inverse head and shoulders pattern. This is a bear trend line that's drawn from the top of the 2007 October highs and the April 2010 highs. And I'll just reiterate, if this were nothing but a bear market rally, we shouldn't be above that line. Technically, we can't be here. I never thought this was a bear market rally, and I've got a video that you might want to find called Why the Bears Are Wrong. If you were interested in why I don't think this is a bear market rally, you need to listen to that video. I give historical, psychological, and technical reasons why this is not a bear market rally. This is a bull market. But anyway, there's your 2-month-long channel. You can see we're still in it. To be honest with you, I don't like the fact that we're now hanging around the bottom of it so much. But I think there may be a good reason for that. I think we might just need a little bit more consolidation. And you can see that actually over the past 2.5 weeks, we've really gone nowhere. Isn't that amazing? So maybe we just need this time to gather up the momentum to make that final push to what I believe will be a short-term target of 1240 to 1250. Let's back out now to a 6-month view. Here's the 6-month view. Here's the inverted head and shoulders that is the driving technical influence of what's going on. Left shoulder, head, right shoulder, neckline. Breakout, pull back, heading back over, taking out this bear resistance line, staying in the channel, and this pattern measures from the depth of the head a target between 1240 and 1250. Let's call it 1245. We'll just split the difference. So the S&P today gained a whopping 0.01%. Congratulations, bulls. And bears, let it be served as notice. You've been trying to knock this market down for how long now? And it just doesn't seem it wants to go. And again, if we look at that 5-minute view here, and you see that orange line, bears got to defend that line, or the bulls are going to push on through and head up into the 1200s. I'm bullish. I think they're going to get the job done. Anyway, thanks for listening to this video and watching it. And when you get a chance, please go to freechartvideos.com. I'm trying to keep all of this free, and the only way I can do that is by generating enough traffic on that website to make things continue. So read between the lines when I say that. I just need more traffic. That way there's the opportunity for a little revenue here and there. So take care, and good trading to you.